Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody. Right now let's take a look at the gold market. Well guys, on Friday market has shown action. This was really not significant. As you can see, the Friday candle, in fact, the inside session to the Thursday one, and our major pattern that we have right now on the daily chart, on the last week, this is bearish grabber that we have on Thursday. This pattern suggests taking out of these lows, and if this really will happen, really market could continue action right directly to the 1150 area. That's our major short-term target. In general, this behavior of the market looks very nice. It's very harmonic, and as in terms of the time, as in terms of the speed of swings. So you can see market is forming ABCD down that has the target is 1150. Market has completed two harmonic retracements, so you can see this retracement is almost equals to this one, as in terms of the slope of the line, as in terms of the time that it has spent on the completion of this retracement. Then market has formed this bearish grabber, and right now is just wait. So this small doji is in fact the expectation, of course, of the Fed Reserve meeting on the Tuesday and Wednesday. Then maybe the Greece solution. So that two major moments that gold market mostly expect. On the high time frame charts, so if you will read our weekly and monthly analysis, you will see that on the high time frame chart, market also forms some bearish patterns. Our long-term bearish patterns are still valid. On the short term, for example, on the weekly chart, on last week we've got another bearish grabber that suggests moving also in an area to 1150. That's why we still keep in our opinion that only some drastic geopolitical news or something unexpected event could shake market and change the sentiment. Recent sentiment CFTC report also point on the shy growing of the speculative short positions. Hedgers also have increased the longs, so this is relatively confirmed the possible downward continuation. Maybe investors are preparing for Fed Reserve meeting. SPDR fund lost another 4 tons on its storages, so right now it stands at 703 tons. That's really very low level of storages for SPDR fund. So any upward action, as previously as right now, haven't been confirmed by and supported by real investors purchasing. So investors buy nothing right now, and that really put under question any rally that we see on the gold market. So on the 4-hour time frame chart, we'll see what we could get in the coming week. So one butterfly we already have got, and this retracement was mostly reaction on this completion of the butterfly, reaching of the weekly pivot support one. This market has shown bounce up, and 2 weeks ago we said that probably retracement should stop around the confluence. That really has happened. So you can see market has hit 1190. That was our area for taking the short position. Market has stopped here and turned to the downside again. But right now market could form another butterfly. And even 127 extension will lead us right to the 1150 area. Simultaneously, we have not just this big ABCD pattern, but we have also most recent ABC top D pattern that also points at the same 1150 area. So probably these two patterns will be the driving ones for a common week. The risk factor here is moving above the 1195. So if market occasionally suddenly will break through the confluence, move above the weekly pivot resistance one, and move above the 1195, that will put under question the further downward action in the short-term perspective on the gold market. The normal market mechanics of the bearish market doesn't suggest such sort of the action. So if this will happen, this will break the normal development of the bearish market, and that's the action that we do not want to get. So guys, for those of you who may be interested with the monthly bearish grabber, we will take a look at the hourly chart. On the hourly chart, that's the swing of this weekly grabber. But gold gives us very tricky setup, because from the grabber point of view, market should not move above this top to keep it valid. At the same time, we have uncompleted ABCD pattern. This 1618 extension stands slightly higher than this top, 1192.27. At the same time, gold keeps chances on the forming of this butterfly that could lead market to 1196. So, how it's better to take the short position in this situation? First of all, let's understand where we would like to take the short position, at what levels. We see a couple of levels here. First one is the 618 resistance 1186 of this most recent swing down. This is the swing of the weekly grabber. Or maybe at the retesting of this trend line, if this retesting will happen at all, of course. But if this will happen, we could try to wait for this retesting of this trend line. Where to place stop? To be honest, guys, the chances that the market will complete this butterfly looks not really impressive. Because if market was really bearish and we would like to take the short position, market should not complete this butterfly, because moving above 1192, as we said, will be a rational action for a bearish market. As market already has shown the reaction, retracement, and re-established downward action, has formed some bearish patterns, it should not again return right back down to this level. That will look not suspicious, but not bearish. This is not bearish action will be. That will not be an action that corresponds to the normal bearish development. That's why, if market is really bearish, it should not complete this butterfly. But if it will complete it, it will mean that market is not bearish anymore in short-term perspective. This is a bit tricky situation. That's why we think that you could place stop above the 1618 extension target of this ABCD, because we think that it really could happen that market could reach this target, and we will not think that this will erase the grabber. Although market will move above this top, but this will happen only just to complete this target. And if market is really bearish, it should return it back down and continue move lower immediately after completing of this ABCD. And that could lead the core of this bearish grabber on the weekly time frame chart valid. That's why it's better to place stop somewhere above this 1618 extension and take short positions somewhere at 1196, 86, or into retesting of this neckline or this trend line. We think that's most balanced approach to the current situation. In this case, your risk will be not really significant if the market will continue move high and will complete this butterfly to the upside. But as I said again, if market is really bearish, this should not happen. That also will be some kind of the indicator. So if market will continue with this butterfly, so do not take any short positions anymore. Wait what will happen. Also, guys, I have to warning you that the coming week could become the doom and gloom and very volatile, and even well-balanced and well-planned positions could be washed out just occasionally on the volatility, because market will be very nervous, mostly on the Greece solution, on Fed comments. Investors expect that Fed comments should be more hawkish currently. So we will see what will happen. So it will be very difficult to trade gold in the coming week. So let's see what we'll get on Tuesday and Wednesday.